Welcome to the Bitcoin Source, your ultimate destination for all things Bitcoin. Today we have a special guest, Patrick Lowry, the CEO of Samara Asset Group. Samara Asset Group is a deep tech powered alternative asset management company with a hyper focus on alpha generating strategies in Bitcoin. Welcome, Patrick.
Thank you for having me on the show. It's a pleasure to be here.
Yes, likewise. So, Patrick, can you elaborate on the key interest that got you started in investing in Bitcoin?
Yeah, sure. Do you want to hear about the first time I got into Bitcoin or the second time? I think for just about everybody, whenever you go through that first cycle, I don't know. It seems as though most people can't stomach the volatility. So I remember I bought my first Bitcoin. It's a story I tell all the time. So back when I was at PwC, I used to be in my past life before becoming a Bitcoin crypto degenerate. I was actually an auditor. I used to be a CPA in my real life, right? So I had a friend in the PwC tech department back in 2011, 2012 or so. I forget exactly when. And he told me when I got my big $500 Christmas bonus that I should not go buy a new suit or anything like that. I should go and put it on Bitcoin. And at the time, I was like, okay, never heard of this Bitcoin before. I'm not a tech guy by trade by any means. So no idea what it is. But he said he made a lot of money on it. So I figured, why the fuck not? So I go and I buy Bitcoin. And wouldn't you know it, about 3 months later, I pretty much lost all my $500 from my Christmas bonus, right? So I was at that point, I was just like, okay, fuck it, I'm out. Can't stomach this stuff. I just lost everything. So fast forward a couple of years, we get towards 2015, 2016. And at that point in time, I had transitioned my career a little bit. I wasn't at PwC anymore. I had gone through a few years working in private equity, and I actually started working as a venture capitalist at the German stock market, the Deutsche Börse. Now, back in 2015, 2016, we at the Börse kind of realized how disruptive blockchain technology would inevitably be for capital market formation, for how we basically operate the Frankfurt Stock Exchange, the biggest singular stock exchange in Europe. It became so self-evident to me at the time, so stupidly self-evident, that every single asset on Earth inevitably would be tokenized. And now here we are, 6, 7 years later, and we're starting to see that come to fruition. We have tokenized securities, debts and equities and derivatives. We're now talking about tokenized currencies, CBDCs, which are the ultimate evil, but hey, they're getting tokenized anyway, so why not? So that's really what brought me down, let's call it the blockchain rabbit hole, because I got to see what the use cases are for blockchain in real time working in one of the financial institutions of Europe. However, I am very much a libertarian by nature. So this is where I discovered Bitcoin for the second time. And as I fell down the Bitcoin mythos, I read the Bitcoin Standard, all of the major literature. I read through the white paper. I think I've read the Bitcoin white paper 100 times at this point. And it really spoke to me because having a censorship resistant peer-to-peer digital e-money that also, by the way, happens to be scarce, completely borderless and inclusive, it just made so much sense to me, right? Like, why can we not have a currency like that? Maybe not as a replacement for the dollar or other fiat currencies, but rather as a very viable alternative, or even better, one day, actually used as a hard asset to back the fiat currencies that we currently have in circulation. So I became a Bitcoiner. And ever since then, we've really been focusing around building in the Bitcoin and the blockchain ecosystem. We can talk about Samara Asset Group, the company I'm CEO of, and what our investment thesis is and what we're focusing on. But that's kind of the long-winded story of my two initial touch points with Bitcoin.
Most definitely. That was awesome, Patrick. I definitely do want to dig into Samara Asset Group. So if you can, could you kind of, expound on, what is the core thesis behind Samara Assets Group's focus on Bitcoin and how does it guide your investment strategies?
So I think it was Peter Thiel that once said the most stupidly obvious thing that all investors should be doing, or all institutional managers should be doing, is just putting their money in Bitcoin. For me, it's been stupidly obvious for a significant amount of time. And we at Samara Asset Group, I should caveat this a little bit. So Samara, exactly as you said, we're a alternative focused deep tech asset manager. We have legacy portfolio companies building in and around the blockchain and the Bitcoin and crypto space, as well as we've launched our own asset management firm, Samara Alpha, recently. So Samara Asset Group used to go by Cryptology Asset Group. We are a public traded holding company in Europe. The company itself was founded by Christian billionaire and entrepreneur Christian Angermeyer and Mike Novogratz, who I think everybody knows from Galaxy fame. Mike is the institutional guy for Bitcoin and crypto. So when they founded this company, they kind of had a vision of it being the European merchant bank for all things crypto, somewhat similar to what Galaxy was doing back at the time. This was, mind you, back in 2018. The operations never really got underway because obviously that was the very beginning of crypto winter. But Cryptology ended up building a very strong balance sheet with a couple of investments that it made. So, for instance, it invested in my company that I had founded, Deutsche Digital Assets, which was one of the first ETP providers for Bitcoin and other cryptocurrencies in Europe. That's effectively the European version of a Bitcoin ETF. We've had that in Europe for many, many years. So I stepped in as the CEO of Cryptology Asset Group, and we basically over the last couple of years have been going through a bit of a restructuring, a bit of a realignment in strategy, going away from being just that holding company for venture capital investments that this company had made in historic companies, rather focusing more on investing in liquid assets, such as one of our portfolio companies. It's a large Bitcoin mining group, Northern Data, as well as, of course, Bitcoin. We've been stockpiling Bitcoin pretty significantly over the last couple of months, and also into liquid managed strategies. And this is where we launched Samara Alpha, because we frankly see a very small, we see a niche that needs to be carved out in crypto asset management. And frankly, that niche needs to be institutional grade asset management. When you look at what has transpired over the last year or two, all of the major crypto asset managers, if we're to call them such, they're effectively dead. So you have your Pantera that's still around. You have Multicoin, but there's rumors that they're going under, that they're under investigation. You have Galaxy, of course, and a handful of others. But I mean, 3AC is gone. The large lending platforms are gone. All of the small, let's call them Twitter trading funds, they're all dead and gone. So we felt it was time to build a real institutional grade asset manager. And that's why we brought in a team that has been doing this on Wall Street for many, many years. They're building out all the operations. They've launched 2 funds already just in 2023, just since the 1st of July. So we're actually very excited by what we're building within the asset management space for crypto.
You know, there's so many things to unpack there, but when you really talk about the high level management, you know, there was something that I was told from people where you know, when you start amassing a large amount of wealth or you have an asset that's getting into the billions or trillions of dollars, that most wealth that's generational is managed. It's not like,
Oh, yes.
you know, privately held by someone with a private key or something. And that kind of alludes to my next question, which I think a lot of Bitcoiners can think can be egregious, which is the Bitcoin ETF, right?
Yeah.
So you know that's kind of something that might be rolling out Q1 or Q2 of 2024. So my question to you, Patrick, is why are ETFs important in the crypto space, and what implications do they have for both the individual and the institutional investor?
So I find it, frankly, I find it egregious that Bitcoiners are so against Bitcoin ETFs. Now, at the very surface, I get the argument that Bitcoin is not meant to be centralized. Bitcoin is not meant to be held in an investment product that is custodied by a centralized party such as Coinbase, etc.
Hey there, fellow Bitcoin enthusiasts. We just wanted to take a moment to appreciate you for tuning in to the Bitcoin Source, a Bitcoin conversation. Your support means the world to us as we dive into the exciting world of Bitcoin, blockchain, and all things cryptocurrency. If you've been enjoying our content, don't forget to hit that like button. It's like a virtual high five that keeps us motivated. And hey, sharing is caring. If you know someone who'd geek out over Bitcoin as much as we do, hit that share button. Finally, if you want to stay up to date with all our latest episodes and insights, make sure to hit that subscribe button and ring the notification bell. You won't want to miss a single update. Thanks for being a part of our community. Keep exploring and remember, the future is decentralized. Now back to the episode.
On the surface, I agree with everything like that entirely. I always tell everybody, if you do your research and you become comfortable enough with the technology, if you feel comfortable managing your own wallet, setting up your own cold wallet structure, and even better yet, setting up your own node so you can validate and verify your own transactions, you can really protect your Bitcoin. That is far and away the best way to own Bitcoin. 99% of the world isn't comfortable in doing that, is the problem. And what are we going to do as Bitcoiners? Are we supposed to tell 99% of the world, no, you're not allowed to be a part of the Bitcoin ecosystem? You're not allowed to own Bitcoin because you don't own Bitcoin in the way that I want you to own Bitcoin? That kind of goes against the entire mythos, the real cypherpunk libertarian-esque mentality that Bitcoiners are supposed to have, right? So for me, I think about the Bitcoin ETF as nothing more than an alternative user experience, an alternative user interface to interface with Bitcoin, to buy, hold, and own Bitcoin. So for instance, if I'm an individual where, you know what, I understand what Bitcoin is as an alternative currency, I understand what Bitcoin is as a blockchain, I understand the technology a little bit, so I want to buy a little bit of Bitcoin, but you know what? I've heard of all of the scams, the exchanges in Bitcoin. I've heard Sam Bankman-Fried ran off with billions of dollars of people's Bitcoin. I see the biggest exchange in the world recently just admit that, yeah, we committed criminal activity, although granted, not anywhere near on the scale that FTX did, but hey, Binance admitted to criminal charges. I see hacks. If I research Bitcoin, I learned about Mt. Gox. I've learned about all of the various hacks on these centralized crypto exchanges. So you know what? Maybe I'm not very comfortable just holding my own Bitcoin on an unregulated exchange. But you know what? I have a brokerage account. If I'm American, I have TD Ameritrade. I have Charles Schwab. I have Edward Jones, right? I can go on now, because there's a Bitcoin ETF, to my brokerage account where I have my 401k, I have all my assets, and I can actually now just buy a Bitcoin ETF, which gives me not one-to-one, but a very close indirect exposure to the performance of Bitcoin over time. It's all about that user experience. It's all about that user journey. And you know what? It's not my place to tell somebody that their user journey or their preferred user journey is wrong. Just because I prefer owning Bitcoin in a certain way. And hell, I even built some of Europe's first Bitcoin ETPs. And this wasn't even just some of Europe's first. This was some of the very first in the world. Just because I'm a proponent of that, or rather, just because I want to hold my own Bitcoin a certain way and run my own node, doesn't mean that I don't acknowledge that other people have the right to buy Bitcoin in a different manner. And because I have the technical know-how, it's honestly partially my responsibility to help enable that. And I do think that the other ETF providers in the world should be doing the same. So that's where I look at it from an individual or retail perspective. If we want to talk about an institutional perspective, one of the primary things you have to understand about asset management, and frankly, even institutional banking as a whole, I mean, people think that asset management and banking is really about making money for your clients. And you know what? It is to a certain extent. You want to invest wisely. You want to get a return, beat inflation, make sure that a family's wealth, whether it be billions of dollars or the life savings of grandma and grandpa, it lasts them through their lifetime. And maybe there's a little bit left over for their kids and future generations. I mean, that is a core part of the business. But to enable that, I would argue the biggest, if not certainly one of the biggest elements of asset management is risk mitigation, particularly the deferral of liability away from any individual party to others. Because if you follow the money flow through asset management, and I'm just going to very much oversimplify this, but you have, let's say, grandma and grandpa, they've saved $1 million. They trust it to an IRA, an individual, a registered investment advisor, RIA. The RIA then invests that money largely in ETFs, largely in a diversified portfolio, some bonds here and there, depending on what the investment strategy and the risk tolerance of that individual is. That money then goes over to the asset manager. The asset manager invested across the portfolio, and then you have all these structured products and default swaps, credit swaps on these products, which end up then being insured by large insurance companies, right? And the system is built like that to defer liability as far down the line as humanly possible. Now, there's not enough insurance in the world to cover any theoretical losses there. So if you're an asset manager and you have your client that comes into you and asks, can I buy Bitcoin? Well, as of right now, if you're an American registered investment advisor, well, where do you buy Bitcoin? Not many asset managers offer products for this. And if it is an asset, or if it's like the Grayscale Trust, like, okay, you've heard of it, you've looked at it, but anyone with half a brain can look at the Grayscale Trust and see that as it is structured today, it is a Ponzi scheme. You cannot get out of it. It's Bitcoin that's literally just locked. It's the worst investment vehicle structure in the entire world. And a lot of people don't realize that. I really hope that they do convert it to an ETF, and I hope that they are legitimate in what they're trying to push there, but neither here nor there. Anyways, you get to the asset manager, and the only thing that this manager, the RAA, has been able to do over the last couple of years is say, okay, I can just go buy Bitcoin and custody it myself. If you're a bank, you're JP or Goldman, how do you get exposure to this for your clients? Well, you can't, because you would have to buy Bitcoin directly and maybe custody it yourself, or maybe you custody it with Coinbase, and Coinbase's insurance only goes up to a certain amount for all assets on the platform. It's not insured the same way that the FDIC insures bank accounts, right? So what happens if, God forbid, you have an analyst or even a manager at one of these banks or at one of these asset managers that screws up the transaction and the Bitcoin's lost, or screws up, or maybe their wallet gets hacked? Well, who's liable for that? It's the manager, or it's the individual at the bank, therefore the bank. Managers and banks aren't willing to take that risk because that creates a super high risk of liability that they're going to get sued by their clients to the tunes of potentially tens of billions of dollars if they put that amount into Bitcoin. Well, lo and behold, what if there's an investment product that you can put your client's assets in? It's regulated, it's insured, and it defers liability down the chain. Because now you put it in the investment product, the ETF puts it into a custody account. The custody account has insurance, and God knows what types of financial products they're building on derivatives of insurance for crypto custody right now. It's probably just completely asinine. But hey, the liability is deferred down the line. And what people don't understand is that once we have that liability deferral in place, and that only happens through a Bitcoin ETF, trillions of dollars are now available to be injected into Bitcoin through these ETFs. Literally trillions. And that's been the bottleneck this entire time, because the SEC has been holding up this decision. Whether it was corruption or not, neither here nor there, it was. But at the end of the day, having this product enables that liability deferral and enables those trillions of dollars to come into the Bitcoin ecosystem. So that's why I'm all for it. Again, it's a good user journey for people that prefer that, and it shouldn't be Bitcoiners that judge people for their preference on that user journey. And it's necessary for that liability deferral mechanism for financial institutions, which enables those trillions to come in. So I'm a huge proponent of the ETF, even though on the very surface, it is the antithesis of what Bitcoin does stand for.
There's a lot to unpack there, but just from my experience, it's kind of two-folded, right? So like me being a podcaster and educator, I always have to implore my audience that they have to do their own research. They
Yeah.
need to consult with a financial professional or a fiduciary when they're trying to talk about asset management, Bitcoin. And for example, my parents are boomers, and I got my mom into Bitcoin, but because I'm a Bitcoiner, I've been in it since 2017. I could sit with her for a few hours and show her what a cold card is or ledger is, and how to set up Coinbase or how to set up Strike or how to set up Cash App so she can buy Bitcoin and hold it for her retirement. So it was kind of one of those things where there's so many boomers that have no idea how to do this, how to set it up. They're scared of technology. They're relying on an asset manager to kind of help them. And I think that the ETF can kind of segue them into an ease of transition with the 401k setup, the IRA setup.
Oh,
People such as your
150%. I mean, we haven't even, I mean, talk about the 401ks and the IRAs. I mean, the tax benefits, if you're an American, the tax benefits that this creates, because, okay, Bitcoin is taxed in a certain way, but now you have, if you have it in your 401k or your Roth IRA, you now have tax-free income that can get exposure to Bitcoin through the ETF. You can't do that with native Bitcoin, which we can argue until we're blue in the face if that is correct or not. But unfortunately, that's the way the current tax codification is set up. But hey, you put it in a Bitcoin security, you get the tax benefit. It's immensely powerful and will enable, I do believe, trillions of dollars over the course of the next decade to flow into Bitcoin.
100%. And I think that a lot of smart Bitcoiners will be doing a little bit of both 50-50. They'll have native Bitcoin, and then, if they plan on retiring with that current tax structure, they'll have a retirement fund or they'll have some type of retirement goal using Bitcoin. So I 100% agree with that, Patrick.
Unless the tax law changes, like, so for instance, let's hypothetically say, let's fast forward a year from now, the Bitcoin ETF is approved. And I mean, so I currently own Bitcoin myself. I just have it in my cold storage, my custody it myself, blah, 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 right? I do it the way that a Bitcoiner is supposed to do it. But in parallel with that, because I absolutely love the platform, I do buy native Bitcoin every hour in an automated transaction on River, Alexander Leishman's company. I think it's one of the best, it's the best retail platform to buy Bitcoin on today, bar none. I love what Alex has built. It's the most convenient and cheapest way to buy Bitcoin. It's wonderful. But whenever I get that tax benefit, I mean, I'm a CPA by trade, I'm obviously going to take advantage of that. So I'm going to absolutely max out my IRA contribution, my tax-free IRA contribution from my employer, which is my company, into a Bitcoin ETF, because then I can harvest the tax benefit of it. And you know what? It's not the best way to buy Bitcoin, but from a pure financial perspective, it is. And I do think that we have to think of Bitcoin in two kind of parallel divergent paths right now, because there are those of us that look at Bitcoin as purely the speculative asset, which makes it makes a strong investment case. It's a buy and hold it forever. So maybe that is something that goes into an ETF, because you don't ever plan on really using it. Maybe at one point in the future, you liquidate it for a retirement home or something along those lines. The second house at the beach, right? Living the American dream. But in parallel with that, you will need native Bitcoin. And people really discount how important this will inevitably be, but you're not going to be able to use a Bitcoin ETF for microtransactions in the future. You're going to have native Bitcoin, or you're going to have Bitcoin on PayPal or Venmo or one of these other service providers, or in your bank accounts. Every bank is inevitably going to offer Bitcoin custody service. That's an inevitability. You're going to need native Bitcoin to transact on a daily basis. Now, when you're transacting on a daily basis, I don't think anything will ever be denominated in Bitcoin. I don't think it has to be, but it will be denominated in dollars. It'll be denominated in euro, in whatever currency your local jurisdiction has. But Bitcoin, the same way that Swift and SEPA and all of these other internet-based protocols enable the back ledger to transact in dollars or euro, Bitcoin will be the back-end internet protocol that enables instantaneous settlement in dollars and euro. And I do believe that that's an inevitability. So once people get into Bitcoin, because of the Bitcoin ETF, I think there's going to be a mass flood of people who finally understand Bitcoin, because now they see its value, they see its benefit, they've made money on it. They're going to come into native Bitcoin. People are not really talking about that. We just think people are going to buy it from an investment standpoint. But if you're a believer in Bitcoin as an alternative, or rather a viable alternative currency, which I do, there's going to be a mass flood into this. And maybe not just in the West, but I mean, if you go to Africa, you go to Latin America, you go to Southeast Asia, that's already been happening. It's just a matter of time before it starts to happen in the West, especially with the currency debasement we're currently going through right now.
100%. And I interviewed a real estate investor who's heavy into Bitcoin named Leon Wankum, and he talked
Hmm.
about Bitcoin becoming kosher, like the ETF making it become like a kosher asset.
And from an ethical point of view, Bitcoin is just good and ethical money. There's a lot of, I think Saifuddin Ammous talks about this a lot. He says Bitcoin is halal. And also from a Jewish perspective, Bitcoin is kosher. Why is Bitcoin kosher? In Judaism and in Islam, also in Christianity, it's not allowed to take interest on debt. Why is that the case? That is the case because in the past, the way that debt was handled was inhumane. Sometimes people were even enslaved if they were not able to pay back their debt, right? And Bitcoin is money that you don't need to ask interest rates for because it's deflationary. If I lend you 10 Bitcoin and I want 10 Bitcoin back in 10 years, those 10 Bitcoin will most likely have increased in purchasing power through the deflation of Bitcoin. So I don't need to ask you for interest rates.
And that just makes me think about what you just said during this conversation, where, there's going to be so many companies out here that are going to be looking at Bitcoin on a different level once the ETF is approved.
Oh yeah.
And I wanted to ask you, especially with Samara Asset Group, could you kind of get into how Samara Asset Group is going to leverage Bitcoin on its balance sheet to create this emerging asset for managers, and what criteria do you use to select them?
So we do a couple of things with Samara Asset Group with our Bitcoin. So, I mean, a bit of history here. We as Samara Asset Group, for the first couple of years that it existed until I stepped in as CEO, it didn't really have any native crypto assets, Bitcoin, Ethereum, etc., on its balance sheet. It only invested in companies building in and around Bitcoin and crypto. Probably the most prominent company that we were invested in at the time was Block One, which, I mean, Block One, they're the guys behind EOS, and we can debate until we're blue in the face the merits and the shitcoinery of EOS. But I mean, hey, if you were a shareholder of Block One itself, you were very happy with the investment because Block One ended up having more Bitcoin than God. Although I guess Michael Saylor now has more Bitcoin than anybody, so maybe Saylor is God. So when we liquidated our position in Block One last year, because whenever we were investors in Block One, we valued it based on the amount of Bitcoin Block One owned at the time. We viewed our investment in Block One, which has made a couple of other very good investments. But we largely looked at it as a large Bitcoin balance sheet, which obviously there's worse investments to have. So we looked at the Bitcoin. But then when we sold out of Block One earlier this year, earlier this year, it's not January yet, we took those assets. We provided a large dividend to our shareholders because we had liquidity. I think we paid out nearly 75 million euros to our shareholders. And the remainder of it, a portion of it went into the asset management platform. We've made a couple of other investments here and there. And the bulk of it we've put into Bitcoin. We've been dollar cost averaging in the Bitcoin over the last couple of months, as I mentioned earlier, the first time that we really have native Bitcoin on our balance sheet. Now, what do we do with that Bitcoin? Well, we dollar cost average in and we've been buying and holding it. And one of the things that we recently did is we invested into Samara Alpha's market neutral Bitcoin denominated fund. So if you're familiar with fund structure, and I don't want to get too technical, but usually if you're a hedge fund, just to make it simple, your balance sheet, your income statement, your investments are denominated in dollars. And the management team of the fund pays itself what we call a management and a performance fee in dollars. Now, if you invest Bitcoin into a fund like that, you're going to get a lot of what we call beta of Bitcoin because Bitcoin obviously goes up and down. So if you convert that Bitcoin into dollars, you lose that beta, right? Well, this is why Samara Alpha, they built not only a dollar-denominated market-neutral fund, they built a Bitcoin-denominated market-neutral fund. So if you look at the fund itself, nothing is denominated in dollars, no investments, no returns, no income, no losses, no expenses, and especially the management fee and the performance fee for the manager are denominated in Bitcoin. So we put Bitcoin into the fund. It sits there. They invest it denominated in Bitcoin. So we capture all of the beta of Bitcoin plus the alpha, which is usually maybe 10 to 20% per year. of the market neutral strategy, the investment market neutral strategy itself, right? So basically, as long as they perform the way that they should, we can expect by investing, I mean, let's say we put 100 Bitcoin into the thing, we can expect to gain 10 to 20 Bitcoin on that per year, basically. So that's one of the things that we did, because it's effectively putting your Bitcoin to work. It's very similar to, I mean, not from a technological perspective, but from a fundamental perspective, staking your Ethereum. You turn around, you stake it in the nodes, you earn an APY on it. I view that strategy for the Bitcoin the exact same way. Now, the other thing that we like to do with our Bitcoin is we've gotten a lot, I mean, I don't want to call it an apology tour because it's not. But I mean, hey, when we've made as much Bitcoin on our Block 1 investment as we have, I feel there's a bit of a responsibility to give this Bitcoin back to the community. So we've started doing a lot of charitable donations. Earlier this year that we announced that we would be financing through Brink, the company run by, or not the company, but rather the foundation run by Mike Schmidt. We're going to finance a Bitcoin developer their entire salary 1 year as a part of a charitable contribution. We're going to do that in perpetuity. On the other side, we also, one of my good friends, Alex, he introduced me to a woman, Lorraine, in Kenya. And she runs a platform called Bitcoin Data. Oh, you know her then, yeah?
Yes, I do.
She's fantastic. So she runs a platform called Bitcoin Data, which focuses on Bitcoin education for women in Africa. And I had her on my podcast a few months ago, and we were talking about the work that she's doing and all of the effort that she has. And like, honest to God, I just fell in love with her and what she's trying to do from the get-go. So I was like, okay, I mean, can I just give you the Bitcoin now? Please take it. This is just absolutely phenomenal. So we're starting to look at different charitable contributions in Bitcoin that we can make exactly like this, because, I mean, at the end of the day, Bitcoin education and Bitcoin core development is probably some of the most important things that we can be bankrolling. And unfortunately, Bitcoin doesn't have a giant foundation behind it like Ethereum or Solana or the other cryptocurrencies that can put and funnel all that money into that ecosystem, which on one hand is a very good thing for Bitcoin. It makes it more decentralized. There is no management team of it. There is a negative that it doesn't have that type of capital available to help foster that ecosystem. So we feel it's a bit of our responsibility to be looking into this and providing those charitable contributions. So that's just another way that we do use our Bitcoin on our balance sheet.
You know, looking into 2024 with your experience, Patrick, how do you perceive the trend of institutional adoption of Bitcoin going into next year?
So we've been talking about this for a long, long time in crypto, haven't we? Right. So how do I think about this? I think there's a couple of dams that are about to burst for Bitcoin going into 2024. And let me maybe try to list these out, and I'll try to keep it as simple as sweet as possible. The first one, of course, is the Bitcoin ETF. If that happens, like I said, I do believe that over the course of the next decade or so, trillions upon trillions of dollars will be poured into Bitcoin. People severely underestimate how important the Bitcoin ETF is. Like, I know Samson is getting a lot of flack on Twitter for saying that with the Bitcoin ETF, we could see $1 million Bitcoin pretty soon. I personally don't believe it. And I really try my hardest not to make price predictions. Now, while I do believe that by the end of this decade, by 2030, Bitcoin will be $1 million per Bitcoin, that's just an inevitability to me. Maybe I'm not as optimistic as Samson, but he's not wrong. His logic is not flawed. Will it happen? I don't know. God knows. I hope it happens. But we'll see. It could or it could not. But that is the type of institutional buying power for the reasons I kind of highlighted earlier. I do believe that we will see. Secondly, we are going to have, for the first time in history, an election cycle in the United States that is going to have Bitcoin as a presidential topic of debate. Now, will it actually happen in the general election? I honestly don't know. If we're to assume the two frontrunners, Joe Biden and Donald Trump, end up becoming the party nominees and there isn't a viable third-party candidate that's allowed on the debate stage, then probably it won't be a big topic of conversation. I mean, Biden and certain elements of the Democrat Party, particularly Senator Karen, are weaponized against Bitcoin, or rather, they are weaponizing the powers that be, the regulators, under their guidance against Bitcoin and crypto. We see that with the SEC. We see that with the DOJ. And on the flip side, Trump, while I don't think he's really made too many comments about it, he's certainly been anti-Bitcoin. I think he said it's a Ponzi or something along those lines at some point in history. So unfortunately, the two boomer candidates, it won't be a topic of conversation. But if you look past those two, well, who are the three primary candidates behind those two? It's RFK Jr., for sure. He's a huge Bitcoin proponent. It's DeSantis, who has said that he likes Bitcoin, but he hasn't really taken a huge stand for Bitcoin. But he's very anti-CBDC. He's already passed legislation in Florida banning CBDC. So we have to assume he's a big Bitcoiner. Okay, and then maybe you have Nikki Haley. I don't know what her stance is, but you have Vivek there, right? Vivek Ramaswamy. He's the biggest proponent of Bitcoin maybe in all of US politics right now, except for maybe RFK. Like, I love Vivek because of how hardcore he is on Bitcoin.
Yep.
So you have the mass populace of America, which, let's be honest, even though we all hate the election cycle, we all kind of secretly love the drama that goes with the election cycle. It's popcorn television, right? Especially if Donald Trump is there. Everybody in America is going to be tuned in and watching Bitcoin being discussed in real time. That's never happened before. So you couple that with the fact that regulation and compliance is really kind of being built in a favorable way now in and around Bitcoin. Institutions are obviously going to be jumping into that. That's going to be a huge thing. And then I touch on the third layer that I think is going to happen, and this is a bit more speculative. But as we know, every single year, the real reason why crypto goes through its major hype cycles, it's the Bitcoin halving. And you know what? Last time around, it ended up becoming a little bit more compounded. So we had the Bitcoin halving, which really kicked everything off in 2020. That effect got compounded by government money printing and the inflation from our response to COVID, our government's very irresponsible response to the COVID pandemic. And then we had, number two, the Ethereum ecosystem actually building real applications on top of it. And then you had a couple of other layer ones. I mean, don't get me wrong. I'm more Bitcoin than anything else, but I'm far from a maximalist. A lot of the shit that was built on Ethereum is profound. It's astounding. The DeFi, the NFTs. Now, granted, DeFi and NFTs, unfortunately, I mean, it's crazy in crypto. Whenever we build something that can be revolutionary and fundamentally change global commerce, we end up turning it into scams, just like we did ICO. I mean, that's the way DeFi unfortunately went for a large part. And instead of having real use cases of NFTs for brand influencers, for digital art, etc., we ended up with fucking digital monkeys, right? So in crypto, we always create something wonderful and then we destroy it. Well, hey, just because we ended up having a few bad actors, just because we had bad apples, doesn't mean that there isn't value in such technology. And I believe this year, because we are now seeing Bitcoin layer 2 solutions, we are now seeing BRC20s gain real volume. We are seeing ordinals being printed like crazy. I believe that we are now finally at the precipice of what will be Bitcoin becoming A, scalable through the Lightning Network and other layer 2 solutions, solving the blockchain trilemma, and B, developing real-world use cases such as DeFi, such as NFTs, and we're pretty much already there, on top of the Bitcoin ledger. Now, this means that Bitcoin, finally, will be able to be truly used as that viable alternative currency. But if we build DeFi and if we're enabling tokenization on top of Bitcoin, the way that I believe that we will be in the near future, the same way it was done on top of Ethereum and other layer ones, I believe Bitcoin becomes transformed from being that peer-to-peer, censorship-resistant, decentralized digital alternative currency to the dollar and the euro. Bitcoin now has a legitimate chance to become the trustless de facto base ledger system for all global financial transactions, full stop. If we get to a point where Bitcoin becomes scalable, which I think we are, and it still remains at its core code trustless, it still remains at its core code decentralized, and we enable tokenization on top of it, I believe that we will see dollars, all stable coins that we call them, backed by the Bitcoin blockchain. We will see capital markets, the Deutsche Börse, the New York Stock Exchange, the NASDAQ, tokenizing equities, tokenizing securities, but securing them on the Bitcoin blockchain. They will not be built on Ethereum. They will be built on Bitcoin. This means that we will have a 24-hour, globally transparent, trustless, and inclusive financial ecosystem that anybody can access. And I think institutions are more willing to accept that on Bitcoin than they will be on some of the other blockchains, just because Bitcoin has that brand power. People severely underestimate how powerful that Bitcoin brand is. If you go into a boardroom at any of the Fortune 500 companies, the majority of them are not talking about Ethereum. Zero of them give zero fucks about Solana. They're all talking about Bitcoin. Every single one of them. And I think that's the inevitability that we're going to see. So Bitcoin actually will be significantly more, in my view, than even most Bitcoiners give it credit for. And I think that's where the three elements of institutional adoption are really going to come full heel in 2024.
100%. Bitcoin is like a brand. It's like Pepsi or Coca-Cola. And what I wanted to really ask you, Patrick, was something that I think you find vastly important, and I think that a lot of your clients do as well, which is investor education. So what role does investor education play in your strategy, considering the complexity of Bitcoin and blockchain technology?
So, I mean, I think investor education is far and away the most important thing that we have to be doing right now. I mean, similar to you, that's why I have my own podcast. I honestly don't know if any Samara investors even listen to my podcast. They might get really tired of just listening to me talk in general. But I have my own podcast where I invite very prominent Bitcoiners onto the show, and we have conversations about it. I invite people that are more shitcoiners, and we have conversations about the difference between Bitcoin and some of the other assets that are out there. I invite financial advisors on so we can have a conversation. And these are pro and anti Bitcoin advisors. We have conversations around why they advise their clients to have Bitcoin, or rather what they need to see to advise their clients to have Bitcoin. And also advisors that don't like Bitcoin, why don't they? And we sit down and we have an honest conversation about it. And we have fun and we do other stuff on the podcast too, but really we try to focus on education and really having meaningful conversations, exactly like you and I are doing right now, that people can just listen in on, and maybe they learn a thing or two. I mean, at the end of the day, if we aren't able to educate the masses why Bitcoin is valuable, why Bitcoin has real, tangible value, then we've failed professionally. I mean, anybody can make money on Bitcoin. If you go in and you buy Bitcoin today, I believe you're going to be successful financially. But if we don't educate others why they should be in Bitcoin themselves, then what are we doing this for? It just doesn't make sense.
You know, what long-term goals for Samara Asset Group in the Bitcoin landscape do you see, something that you'll be implementing down the road? So like, can you give me some goals of like what you have projected for your clients, and what do you also have projected for yourself personally and your investment?
So, I mean, at Samara, we're going to continue to invest in Bitcoin. We're going to continue to invest in companies that are building in and around Bitcoin. And we're going to continue to invest in managers that are curated by the Samara Alpha platform. So we're going to seed the asset managers that we harvest into the Samara Alpha platform, and hopefully not only gain from the performance of the strategies these managers have, but rather we're also going to participate in the upside of the growth that these managers have. There's a lot of very smart crypto asset managers out there that just don't understand how to become institutional grade. We do. I've done it. We built ETFs, ETPs in Europe. we're just going to try to help these young emerging asset managers by seeding them, giving them capital, and helping them grow. So for instance, did you see our Bitcoin Alpha program that we did with the Bitcoin Magazine guys?
Yes, I did. Yep.
Yeah, so there we ran a competition over the summer with Bitcoin Magazine. These are the guys that run Bitcoin Miami, Bitcoin Amsterdam, where we said, hey, if you have an investment strategy in crypto that you believe you can beat Bitcoin, let us know. Join this competition. We ended up having over 200 people join. And if you win, we're going to give you $1 million at the end. And we're going to help you set up a fund. We're going to seed your fund with $1 million. We announced the winner at Bitcoin Amsterdam back in October. That fund, I expect, will be launching in Q1 next year, because obviously setting up a fund, there's legal, blah, blah, blah. It just takes time. And we're seeding that manager. That will be the first manager on the Bitcoin Alpha, or the Samara Alpha platform. From there, we're going to be adding more managers. We're going to be doing this competition every year, and we're going to be sourcing managers from outside of the competition. So that's where we're going to continue to try to grow the balance sheet of Samara. At the end of the day, that is my utmost responsibility, continue to enhance the assets of our balance sheet such that it becomes reflected in the share price of the company itself. We're also, of course, going to source for new liquidity. We're going to continue to source, hopefully, new shareholders that become excited by the story, the vision that we have for Samara Asset Group. Then, yeah, we're going to continue to do whatever we can to see Bitcoin succeed, come hell or high water.
Thank you, Patrick, man. This episode was awesome. I learned so much from your insight, your unfettered genius in this asset management world. So thank you for
I'm not a genius. I'm just surrounded by smart people.
So
any room I go into, I'm the dumbest person in the room. But again, that's why Peter Thiel said the most stupidly blatant thing is to just put money in Bitcoin. I'm one of those stupidly blatant people.
Yeah, 100%. So yes, man, thank you for this episode. I appreciate it. And hopefully, I can get on your show. We can have a conversation. And thank you for being on the Bitcoin Source.
Hey, man, I would absolutely love that. Thank you for having me. And we'll definitely have to get you on my show sometime. Have a great day.
Thank you.